In this example, we will look at the sales of merchandise transactions into T accounts using the periodic inventory system. We will record the following transactions using the T accounts, assuming the periodic inventory system is used, and we're going to enter transactions in chronological order. If an amount is 0, we have to enter 0 into the box. So August 4th says sold merchandise on credit to Rock Company, terms N30, FOB destination $2,520. So the terms N30 means that we need to be paid within 30 days. An FOB destination means that ownership does not change hands until merchandise reaches its destination. Therefore, the seller owns the merchandise and is responsible for the shipping costs. So the first transaction, August 4th, we're going to record the sale, and it's on account. So we will debit accounts receivable on August 4th in the amount of the $2,520. And we sold, so we need to record our sale also on August 4th in the amount of $2,520. Now, unlike the perpetual inventory system, we only have one transaction when we have a sale, because we are not updating our cost of goods sold account as we go. That will be updated at the end. Okay, so then August 5th, we paid transportation costs for sale of August 4th, $231. So if we're going to pay our transportation costs, we're going to credit our cash account in the amount of $231. And transportation costs will go to our account called Freight In, also in the amount of $231. Then on August 9th, part of the merchandise sold on August 4th was accepted back from Rock Company for full credit and returned to merchandise inventory, $735. So we're going to accept a return. Now, we don't take it out of our sales accounts. We're going to use our contra account sales returns and allowances. So under our sales returns and allowances on August 9th, we will debit or increase that account in the amount of the return for $735. Additionally, if items were returned, it no longer has to be paid. So we need to take $735 out of our accounts receivable account. September 3rd, we collected in full the amount due from Rock Company for the merchandise. So on September 3rd, we will then debit our cash account for the amount of $2,520 minus the $735 return, so we will collect $1,785. Additionally, if we're going to collect the cash, it is no longer owed to us, so we will also, on September 3rd, decrease accounts receivable for the amount of payment of $1,785. So now what we will do is we have done the transactions, and now we will foot and balance our accounts. That leaves us with $1,554 in our cash account. Sales is $2,520. We will foot our accounts receivable accounts. So we have $2,520 on the credit side and $2,520 on the debit side, leaving us with a balance of 0 for accounts receivable. Sales returns and allowances has $735, and Freight In has $231. So we have completed the transactions under the periodic method for the sales of merchandise.